I'm in love with you, and I just can't commit myself. I'm in love. can't pick myself. I'm in love with you, and I just can't pick myself. I'm in love. just can't forgive myself. I'm in love with you, and I just can't forgive myself. I'm in love.
All right. Good morning, everybody. How we doing? Somebody give me a sound check. Give me a screen check. Looks pretty good to me. I changed it up a little bit today. I am doing, what is this thing? Oh, it's just my Suncan. I'm doing it from the Mac today. and I kind of like it. I got my 4-screen Mac, so it really makes me a lot easier to manage everything from trading to everything else. The screen looks really sharp to me. Tell me if this looks a little sharper to you versus the PC stream. I'm looking at the screen here. Well, no, actually, it looks sharp to me. But where are you guys over here? How's the screen looking to you guys? Let me know. I can make it a little bigger if that's a little bit better for you. Let me know that as well. All good. All right. So we obviously have a disagreement on the choice of music, but since I get to choose the music, that's what we're going to be playing for a little while. I'll find something else. Maybe I'll find some classical music to play in the background. I just needed something to like pump us up because I thought the music we had before was just so mind-numbingly boring. I wanted to kill myself when I was listening to it. It's like the worst music that you get to hear when you go to the dentist's office, and even my dentist's office doesn't play music that bad. So I thought this was a little better for you guys. Anyways, how's everybody doing? Last day of trade for us this week. Oh, I want to ask you something. All right, tell me this. I'm going to take myself off. Is this better? Because during London, guys told me that they really like this, the view like this, where I'm off screen and you guys can actually see the screen a little bit better. Is this better or not? Like, should I broadcast like this, or do you want to see my face? Have me involved. I'm going to come back in here like this. Does it make much of a difference? I thought, maybe in London, because I'm doing a lot of MT5 work, it might be a little bit harder, but I think this is okay. I think you can see myself on here. So let me know. Let me know what you guys think. You like it full screen? Better clear chart. All right, fine, guys. Okay, then I'll just get off screen. Screw you all. You don't get to see my beautiful face. We'll go full screen, no problem. Enjoy it. Makes it easy for me. I don't have to shave in the morning then. No, it's cool. I'm totally fine with the full screen thing, and I can come in for Q&A as things go around. Man, it's a slow day today. People are just crawling into the room today. I'm gonna give it a few minutes here for trades to start. So let's kind of review where we're at as far as charts go. I can actually maybe I can even, let me see if I can take this off. So this is S&P, right? And we're looking at the S&P chart here using my BFF scalper. If you guys want to see my trades earlier today, we're going to go to the small one here. Let me go to settings. Trading executions. So I'll run you through my executions. Actually, you can actually see them pretty well on this chart, right? It sort of, I think it works pretty well. So let's start with like somewhere around here, because I'm going to walk you through my trades to give you an idea of my thought pattern, what I do, why I'm doing what I'm doing, and why it continues to work, hopefully. So first of all, everybody who's new, I'm going to explain this obviously to you guys. This is my proprietary BFF scalper. Oh man, I really love being off screen. Jesus Christ, I don't even have to talk to the camera. Oh man, Google search, fuck you. No, I'm just kidding. This is Google search. Google search's comment. Thank you so much. Oh, it doesn't show comments. Oh no, there it is. It does show. Okay. Yes. So yeah, my very big fuck you from New York for saying that, but it's fine. I don't have any egos. I actually love like not talking to the camera because I don't have to worry about talking to you guys, but I'll come back on the camera. Anyways, let's talk about what I did. So 200 period SMA. Actually, I'm going to annotate this now. I guess we're going to do it this way. 200 period SMA, 8 period SMA, above 200 period SMA, we're in an uptrend, right? We're in an uptrend. The width is pretty narrow. Obviously, you know, it's holiday trades, so everything needs to be completely and totally halved. Like you know, if in a regular trade we're looking for like 30 basis points of width, now holiday trade 15 basis points of width is pretty much all you need for what I call an extreme move, because everything is much more tempered as we're in holiday trade. There's not going to be a lot of volatility and movement. So, but anyways, this is close. 8 is close to the 200. The trend is just kind of beginning. It's 3-4 moves into the trend. I have a 4H, right? 4H means telling me that it's a higher high. I'm a buyer here. I bought it 31.50. I think it sort of just stays here forever. Like it goes like a 10-minute trade. I don't get stopped out. I was perfectly happy to, if I get stopped out, buy underneath here to go again. And I take out this trade at profit, right? Then I buy again. What do I buy here though? Oh, I buy here at the 7H. I think I buy the 7H over here, and then I sell it again over here on the higher. So I'm just basically riding the trend. Now, the first L comes in over here. The first L comes in over here, and I sell at 37.25, and I buy it here. Sorry. The first L comes in over here. I sell the 2s over here, and I buy them over here. This is my first fade move. So I did something that I thought was halfway intelligent, which is that I waited until we got a modest amount of extreme. But most importantly, I needed the first label to tell me weakness. So an L, obviously an L in an uptrend, is the first sign of weakness. I get short here, boom, boom, boom. I sell it. Then I have another L label over here on the green side, 11L, meaning that the I get rid of this. The 11L over here is telling me that the actual momentum trade is a lower high. So here I sell again too, and I take it back. So you can see I basically have 1, 2, 3, 4 positive sequences. Now I got nothing to do. Now actually the trade here would have been a buy, buy to dip here around the moving average. It's kind of a support trade. Like once I get the moving averages next to each other, I have a support trade. I kind of, I would kind of buy it. So that was the story with S&P today. Then we go into, I just did a trade in gold. So gold is actually, what is this? Hold on. Why do I have a buy stop here? Am I in trade? No, I'm not in trade. I don't know why I have a position here. Sorry, I need to get rid of this. Gold now is trading February contract. Just to let you know, I had to roll to February. I didn't realize. I was like, man, December is so thin. I didn't realize that that it was February contract. And so we're now rolled to the MG or GC G5, which is the Feb contract. Just so you guys know, okay? So within that, we had a nice big burst up, right? And here's where very, very important to allow myself more than one opportunity to resolve the trade, because this is a pretty classic long trade, right? So I am, all right, I'm trying to find my little arrow here. So we are compressed. It's only third of the fourth move through the moving average. This is a 3H. I buy this. Now, there's always a danger that this is peak buy, right? And what we do in terms of fighting that is that we don't ever allow this to be the initial trade. So clearly this was a peak buy. It drops like a stone. I buy it again here. I actually bought the first lot was in the December's, and then I rolled over to the February's. I buy the February's and I resolve the February's. Now the February's resolved pretty much at break even because it was a pretty sharp drop, but it's fine. But what I should have done now is I should have bought the support over here at around 75.1 because you know, I think that's a pretty decent last kind of a buy trade. We're still in a buy trend. If it stops dropping lower, I'm happy to resolve it for 1 or 2 trades down here. But generally, as you can see, I'm sort of trading. My basic assumption is I want to trade with trend until I get to an extreme level and I get a divergence signal, and then I may start fading trend. And I always want to try to buy support or sell resistance off the 200 SMA as my initial trades, or my last gasp trade to the long side, or my last gasp trade to the short side. So that's sort of, you know, everything that I was doing over there. On these guys, this was all. Where's all these trades? What the hell was there? There was a ton of trade. Why am I not showing the trades here? Settings, trading, executions. Huh. I know I did trades here, guys. I know I did trades. What's going on over here? Huh. Was it that early? Did I do them super early? Oh, wow. It's so early. I totally forgot. Holy shit. Wow. You can tell I was up early. It was 3 o'clock in the morning. So here, classic retrace trades. We create negative trend. First or second level, I sell the first retrace level, buy it back. I sell the second retrace level, buy it back. Could have bought a little bit more. And really, divergence didn't show up until this 7H level here, which is frankly a little early. And also the moving averages were not really that wide, so I wouldn't have really committed to it. But let's say I did. Let's say I did. Let's say I buy the 28s. I'm definitely going to get stopped out at 18s, right? I buy the 18s and I get stopped out at 8s, and then I buy the 8s, and the 8s finally resolve for me. Meaning I buy 928s, I get stopped out at 18. I buy 18s, I get stopped out at 8. I buy the 8, which is somewhere around here, and obviously I resolve that at 18 pretty easily. Or I didn't do this. I'm playing scenarios with you guys, because that's really the key to trading with me, is that we're always going to be playing scenarios forward. Or if I was intelligent, I would have waited for the second divergence signal, which is the 10H signal over here. This would have been a much better signal. Then I want to be buying this 9 over here, far less slippage, because now the width of the moving average is much wider. So that's sort of the basic strategy of what of how I would be doing this and trading this, right? Sorry, I'm going to come back on camera for just a second, just to talk to you guys. So let me know if that's kind of clear, and everything is sharp to you guys in terms of understanding the basic mechanics of what I do. There's 3 things I do. I use my BK indicator, right? Oh, God, sorry. I'm scratching my nose because it's like an endless fucking sneeze fest with me in winter. I use my indicator as my initial parameter of where I am on the chart, and I'm generally I'm trying to trade with the trend for the most part until we get to the extreme level, and then I'm trying to trade against trend. So like right now, we see a move coming into the support on NASDAQ at 939. So the only reason I'm not doing it is because it's market open 930, and we could flush really hard here. I'm pretty confident I can resolve this trade at small size, but I don't really know. Don't know if I want to be a hero here. I mean, what the fuck? Maybe we'll take a little bit of a trade here. Let me see if I want to do this. Let's see. All right, I'm in. On this trade, if this thing dumps over here, you guys can see this. If this thing dumps, I'll get longer at 28. But maybe I'll get lucky and we'll resolve this thing up here. So I'm basically just sort of, buying. It's been uptrend. I'm trying to buy the support, thinking that at very minimum we'll bounce here. We'll bounce somewhere around here on the move. but this is NASDAQ and it can easily dump against us pretty heavily. So watching it pretty carefully here. Over here, I'm gonna give myself a little exit trade here. See how much I really want to fight with this thing. If I do it this way, this gives you a bit more room to see the trades on the charts, I think, right? So it's actually 9:29:43. So we haven't really opened yet. Let's see. It looks like I think we're gonna dump on the open. So I'm gonna give myself a little breathing room if they want to dump it. Okay. All right. I bought 29s and another dump over here, which I kind of thought they would do it. All right. And now I'm just going to see if I could escape myself. Now, if I can't, I'm probably going to just give up this trade. This is, I knew there was, they were going to dump it on the open. I knew I shouldn't have stepped in front of a train, but all right, one more time. Yeah. No, they're really dumping it, and I'm just, I'm buying weakness. I knew this was going to be a bad trade, but let's play this game right now properly. Okay, now we're in larger contract. I'm just going to trade this on the larger contract. You guys will see what's going on over here. And I'm going to exit out. Oh, fuck. Okay. Sorry. And I blew myself out of the large contract, relatively unscathed. Not horrible, but relatively unscathed. Now, this was a very stupid sequence of events, which I knew was going to be happening, but I still managed to get myself out at a relatively decent structure here on the market open. But you should never buy on the market open. I just kind of took it because I wanted to show the mechanics of the thing. But here's the point of like doing stupid things and still surviving the market and kind of getting yourself more or less out of a positive situation. You do this by doing small size. I constantly kept my size super small, and I start my size very, very small. And this is like a conversation I want to have with you guys about this. You can make money or you can survive. And if you want to survive with high probability of success, then you trade small. If you want to make money, you trade large, but you're going to die eventually, and usually much sooner than later, right? So now we're clearly negative trend. Now we're going to reorient ourselves completely to a negative bid in a much more proper structure. Like we're gonna wait for this to reorient. I'm going to take all the trades off so they don't. Where are we? Where's my executions? Oh, here we go. Okay, I'm going to take them off so that they don't distract us on the signals. So what I'm looking for right now, either on NASDAQ or the S&P. Where's the S&P here? Well, the S&P actually resolved much easier. S&P would have been a much easier trade. Another thing is, don't ever trade NASDAQ, right? NASDAQ is the world's. Somebody said to me, "Do you trade ES or NASDAQ?" And I say that I trade ES because I'm not a masochist. So NASDAQ, by its very nature, is going to be much more volatile, and it's going to create a lot more problems for us. Although look at how it's popping. Yeah, it's not really popping up. NASDAQ is actually much weaker. S&P is back up to the uptrend. Would have been a much easier trade to resolve this, right? Okay, that's fine. All right, I'm watching the S&P right now. And for a possible move down, this is really a big, a big breakout near the moving averages. And I want to be long the S&P here. But I got to give myself some time because I needed to retrace to a value level for myself. I'm trading on a 1 minute chart, my friend. You can see it right here. It's a 1 minute chart. Okay, I'm coming in. I'm going to get long the S&P if I can. Okay, I'm in at 33.75, a little bit ahead of the moving average. And here it is. Here's my position. Here's my position. And if it gets larger, I want to do by market. I want to come back again. Look at this. Look at the vol on this thing. But with S&P, I am absolutely comfortable buying this dip over here, more and more so, because clearly the market here was in a much better position on the upside, at least on the open. If I get dumped over here, I'm going to get larger. Now, Wednesday, Thanksgiving trade, it's going to be painfully choppy. So we're going to have to really fight the market to extract money out of it. And especially if I'm, if I start out being on the wrong side of it, which is like, I kind of took the first bump to the upside, and it looks like we're probably going to have a negative trend for the near term. Let me look at NASDAQ for a second here. Yeah, NASDAQ is clearly in a negative trend, and it's clearly dumping. S&P is struggling. Well, let's see if we got it. We got 33.25 is my target. Trying to see if they'll lift it. Do I have the video explaining the latest BFF? Yes, I do, John. I'll send a link in just a second. Let me watch how this trade cycle resolves, and I'll share the video with you guys, which is on YouTube, about the latest, how to use BFF. All right, I'm long the larger contract now. Let's see if we can resolve it a little bit better here at these levels. It's, what is it, 31.25. Okay, and I resolved that out in basically 3 tries. Made money. Let me go through the math with you guys. So if I'm trading the small contract, it's 2, 4. And then I go to the large contract, which is equivalent to about 10 of the smalls, so that instantaneously, not even the full P&L, but I did take the full P&L on this one of 8 ticks, puts me into instant profit. So that gives me about, I think, like about $40 on that particular trade, net profit after all is said and done. And that's one of the reasons why, by the way, I like trading the S&P, because it's super easy to like go 2, 4, 1, 2, 4, 8 on the S&P. Now, here's my point. Markets like today, they suck. But on general markets, your chance of basically resolving everything at level 3 at the 3rd attempt is somewhere around like 90%. At level 4, it's about 95. At level 5, it's about 97, 98, right? Meaning that unless you are completely misreading the market, or something really, really bad happens, you're going to be able to resolve that trade positively. Now, suppose you don't. Suppose my absolute limit is 8, right? 8, like 8 large S&Ps. So I'm trading a $250,000 account. I have a $6,500 drawdown. What do you think happens if I get stopped out at my 6th attempt to resolve the trade? Who wants to give me the mathematics of that? What do you think is the maximum loss I take on a $250,000 account, $6,500 drawdown? From Apex, my friends at Apex. Let me put the link for Apex. Make sure you guys get the accounts before the holidays. See, you guys are all talking about go for a walk. Why am I doing this? Why should I do this? So on and so forth. Nobody's answering the only question that matters. What happens to me if I get stopped at the 6th attempt of resolution, right? I know the answer to this, which is why I'm willing to do it. Want me to tell you? Answer, it's actually 1,200. 1,280, okay? Because I'm trading micros and smalls. So the very worst situation that happens to me, I'm out about $1,200 on a $6,500 drawdown. And 99% of the time, I'm going to survive it. And obviously, a lot of times, you guys know that when I'm trading for real, a lot of times, I'll just take a small loss. Like, it doesn't mean you don't have to resolve everything at a full profit. Losing $100 on level 4 is fine, because you can make it back. The point being is, what I'm trying to explain to you guys is the way I trade is I survive and thrive by making money every day, right? Every day is a positive day. Every day you're with me, it's a positive day, right? Even today, it's kind of a shitty day. At very worst, it's going to be a flat day, right? And the way you make money both on the eval phase and the live phase when you go forward is that if every day is positive, you get paid. Now, if you're trading large, right? Now, the only way every day is positive is because I'm trading so small that I virtually assure myself, knowing every single step of the way of what I'm going to do, how I'm going to trade it, what I'm going to do, how I'm going to, what's my next step, what's my next step. I'm always a step ahead on the chessboard, right? Now I lost my train of thought. What I was basically saying is, trading the way I do, I have very strong confidence, not only that I'm going to, just bank this eval like I've banked all the other evals, but more importantly, that I can get to keep it and I get paid out, right? Now, if you trade the other way, which is I have a lot of confidence in this one trade. I'm going to put all my money on the trade. I'm going to make the trade. Boom. I made $5,000. You feel great. You feel awesome. You're funded like in 1 day or 2 days. That's what everybody loves to do. And I've done it with you guys 1,000 times. It's a lot of fun to have a hunch, bet a bunch, get funded. Boom. Right. However, your chance of actually collecting money on that strategy is the exact reverse of my strategy is 99% get paid. Your strategy is 99% get blown out. Okay. Because when you get to the eval, one large trade, boom, you're out of the account. The number one thing that all of my students in Pass the Prop, and I'll put my coaching link over here if you guys want to come hang out with me at PTP. Let's see if this works. There we go. No? Why is this not working? Oh, there we go. The number one thing that people always ask me is, how do I keep my funded account? Because here are the numbers in real life. 5% of people pass the evaluation, which is a very low fee. About 70% of guys who hang out with me pass that fee, so we already beat them. But then 1% of the 5%, which is like, what is 1% of 5%? 5 basis points, whatever, 5 out of 1,000, actually ever get paid, right? Because they're doing exactly what everybody else is doing, large trades into large size. If you're doing it this way, you're on the opposite side of all the odds. So it's up to you. Everybody can do whatever they want. I'm just simply explaining to you, what I do, why I do it, and why you guys see me P&L almost every single day. So, it's Wednesday, it's quiet. It gives us a chance to kind of understand the mechanics, and I get a chance to explain to you the mechanics of what we do here, right? But it all starts with not being greedy. You can't start large. You can end large, but you can't start large, right? So especially in this little chop ass market action. Let me see what gold is doing actually. Where are we on gold? Gold is up. Gold is actually, I want it to be, I wish I traded gold so far. Gold would have been a nice buy over here. I'm talking, so I wasn't paying attention to gold. All right, I'll get off the screen. Happy to answer any questions. I'll give you. We'll look at this in much more resolution detail here. But feel free to ask me any questions you guys have. Christoph says he blew the $250,000 account today, large size. Yeah, it's fine. I mean, remember, prop firms are casinos. They know exactly what you're going to do. Okay, so 3H over here on gold, 40 seconds left. Let's give ourselves a little okay, I'm in at 78.6. Let's see if I'm buying the dip basically in gold here. I bought the dip in gold. It's a 20-20 trade, meaning 20 ticks target, 20 ticks stop. We'll see if if gold can hold here. And if it doesn't, we'll get a little larger, a little bigger. There's not a lot of activity today. You take what you can get. We'll take the maybe I'm going to move this over here. Let's see if I can just maybe get myself done at 8, 9 ticks. Let's see where, if we can get 11 ticks down. If not. Is this better, guys? Are you guys seeing the screen a little sharper? Give me a yes on this, please. Tell me you like this, because I'm happy to do this with you guys if that's the default of trades we want to do. Rodney says he's struggling to open up an Apex link. Why are you struggling to open up an Apex link? Email me at contact@BK Traders, and I'll happy to give you just, honestly, all you got to do is just go to apextrading.com or what's their new website? Jesus, I forgot the actual website. Hang on, let me here. You're gonna go to, where's Apex? It's apextrading.com. Just simply buy and use BK Save as a thing. All right. So now my shit. Now we're gonna have to manage the gold trade. The gold trade is slipping a little bit towards support. If I get blown out here, we're gonna get a little larger. See if we can get a bounce back. As you guys can see, nothing much is moving. It's one step forward, very little movement forward. So we're gonna have to just do the best we can. Sorry, John is asking me, why didn't I wait for the candle to close on the 3? Oh, because I'm fucking around, John. Because you're right. Well, it doesn't matter. The candle close and my purchase price were pretty much the same thing. This is the candle close, and I'm in over here. So it's not like I really got slipped. It just, the trade is not working. Now, when I get slipped, by the way, now I'm just reacting. Now, there's two ways you can trade this. You can sort of wait and see if it goes lower and you try to buy at the close of this candle, or sometimes you don't get that opportunity, you don't get that luxury, and it bounces back. So because I'm trading small, I'm willing to step into the abyss and take a market entry on my second entry, right? And then if I get tagged out, it's already so deep. It's already like, $4 or $5 below. It's at this double bottom level that I should have a much more reasonable chance of picking up the bottom over here, the snapback bottom trade over here. So we'll see. Right now I'm at level 2. Maybe we'll just give ourselves permission to a little bit better than. We'll see. We'll see if gold wants to kind of hold support here. I mean, generally, you see gold is up on the day. It's up $30, positive trend. So buying these dips should be a more or less intelligent strategy, especially since we're still remain above trend. All right, I'm going to have to get myself ready here. News at 10. Yep. Shouldn't affect gold too much, but we'll see. What is this? This is around 75. So 75. That's going to, relative support level around 75 here if we slip further. By the way, shitty days like today, when there's no price action whatsoever, all the more reason to trade small. Because if you trade large and you get yourself into a very, very negative cycle, it's just, it sucks from every aspect of it. The fact that you traded in essentially non-tradable environment, the fact that you got too large, all these things always affect you very negatively. Without really having any upside. It's just that, we're bored, we want to make trades, and we get ourselves into trouble with large size. Like, honestly, I should not be trading at all today, but we're hanging out, you get to see mechanics, you get to see the trades in action. And all of these are at relatively small size, so I'm perfectly happy to do this with you because it gives you a chance to practice the mechanics. But in the real world, I probably, I would, in the real world, I probably would be doing pretty much this, but maybe even smaller, if I was going to trade. And definitely, but in the next hour and a half, that's the end of trading because we're probably, we're going to die out. Everybody's already, leaving New York City for the holiday. So you're going to see liquidity just completely dry up. Now we held 200 SMA. We get a chance to rally here. We'll see. I'm not holding my breath. It's all very, very choppy price action. We'll see how it plays out. Speaking of which, by the way, let me look at NASDAQ for a second because NASDAQ NASDAQ had great trades. I'm sorry. I'm kind of playing around with this whole let's go full screen, and I'm not really watching everything as I should be. NASDAQ had great trades over here. So you had, we had a negative sell, although no, not even this was really good. This is a 2H, which is, what we were looking for is a 2L. We're looking for like a lower low. So this wouldn't have been a great sell, although in practice, this absolutely worked as a sell. But yeah, no. Nothing here is really giving me great signals here. All right, so NASDAQ now actually is giving me a little bit of a signal, 3L signal, 51 seconds left. If this goes up, I want to be a seller here. And the reason is because, we're negative trend. The only thing the only thing that really makes me hesitate is you see the width over here. The width is 36 basis points. It's pretty wide. That means it's pretty extreme as far as being oversold, and then we're subject to a V-shaped recovery risk. But given the fact that this is really, really lame today, I'm going to take a gamble on the fact that if this thing comes up, I want to be a seller on the bump. So we'll give it a shot here. Where am I? Am I missing the trade? I think I missed the trade. Oh, no. I'm in the trade. Let's follow this trade. So this is a very, very kind of a weak pump off of a pretty strong sell-off. As I said, the big risk here is that we could have a V-shaped recovery all the way to this 95 level, which will force me to go larger and larger onto the 95 level. So we'll see. We'll see if that that's the case. We'll trade the NASDAQ trades now. Keeping an eye on the gold trades are actually working in our favor. So I'm just letting them be. We'll see if they resolve or not. But right now I want to manage the NASDAQ trades, and you can watch them as we go. So on the positive side, this reversal trade, selling the retrace is a lower low, right? So that's positive. On the negative side, I'm just watching this carefully here. On the negative side, the separation between the two moving averages is more than 30 basis points. So it's kind of overbought, oversold. So not a great time to sell something, but we're giving it a shot. All right. We took like 30 ticks out of possible 40 ticks on this, resolved it, took the small win, which is all we can do today. And that was good enough. So you kind of, you got the idea of the mechanics behind my trade on this one. Now going back to gold, gold is just dicking around. Still, it popped up like to 77, and now it's starting to unwind. So now, I'm gonna have to. All right. And now I'm long at this level, around the support level over here. And if it gets, if it goes deeper, I will be fighting this gold because gold is going to bounce back one way or the other relatively soon. And I'm still very, very small on gold, so I'm perfectly okay letting this whole thing resolve itself. Let me go to auto fits. Oh, God damn it. I have a hard time with the trading view condition. Okay, so we're gonna go over here. Now we're gonna get to the big contract if I have to. And that's going to be like around the 73 area if I get snuffed out. Okay, I bought 72s. It really is dumping now down to 71s, and now it's going to see if I have to buy the 70s on the trade. We'll see. Here's the contract. You guys can follow it with me. Yeah, it's gonna dump. All right, I'm buying again. Okay, now 71 is my resolve trade. I'm gonna try and see if I can get a bump on the way back up. Okay, and I'll take full 16, 17 trades to resolve this. So yeah, it's stupid, right? I mean, it's hard to kind of like keep buying while the thing is falling against you, but you see the probability of resolve. Now this was only the third resolution. I was 1, 2, 4, no, maybe fourth. Sorry, 1, 2, 4. This is 1, 2, 4, then 1, 2. So there's a fifth resolution. Not great. And at that point, you're not thinking about, I'm going to make so much money off this trade. You're just thinking, okay, I'm going to scratch this trade out, because clearly my bet on the fact that this was going to be bouncing just didn't work. But doing it this way, I'm able to completely wash away. I collected the money on the NASDAQ. I scratched out on gold, and I'm still pretty much in a decent position for the rest of the day. Now, gold clearly turned negative now. That gold is going to set me up for a pretty clean short trade now as a reposition. And that's the beauty of it. If you escape out of a cycle essentially flat, you're going to make money on the next position and the next position and the next position. And that's the whole idea. Is I try to make money on like 10 positions a day, and I'm going to be taking 20 positions. Most, the other 10 are going to be scratch essentially on the side. And if you can do that, you're still building very, very positive equity the whole time. You guys following me on this? Toonflix, we are trading with my friends from Apex. It's a prop account. Okay, I'm going to put the link in there so you can get a discount from them. So let's take a stock of where we're at. S&P is mildly negative to sort of flat. No real opportunities here. NASDAQ is pretty negative, but really, really wide. So NASDAQ right now, so this is interesting. NASDAQ right now is not a great probability short. Now, this short may work. It's a 4L short, meaning that, it's a weak rally. And if you short this, it probably, you probably have a chance of it going back down. But what I'm interested now that NASDAQ has kind of gotten wide, is I'm looking for the first divergence signal. I'm looking for the first H signal here. And that's going to give me some confidence that I want to go the other way, right? And with gold, it's just starting a big dive to the downside. And that dive, is definitely going to come back, retrace, and give us a great short entry on the opposite side. So we're going to be just very patient with gold. We got out of that trade unscathed, but sort of stupid. And now we have to be patient until we get a signal on gold. In the meantime, NASDAQ is a possible divergence trade here because the width of the moving average is more than 30 basis points. Okay, we get a 5H. Let's see if this thing holds. 5H is telling me that that it's not making a new low. So if I get a 5H in here, I actually want to be a buyer into this dip. I want to be a buyer on the close of this candle. If I get a 5H, I should be so lucky. Okay, I'm going to buy this. All right, I'm in on this trade. Where am I? Here we go. And if this thing dumps, I'm happy to buy more because this is going to. I'm pretty confident this is going to resolve. This is going to be a double bottom resolve, and I'm going to be able to totally resolve this trade. So the first entry may not work because it may slip a little lower, but I'm betting on the fact that if it comes down over here, this is going to be good support and it's going to bounce back up. Now, when I'm on my first level where I have no losses I need to make up on, I can be aggressive on my exits. If I don't see this thing popping really, really straight up, I'll tighten my exit to like 20 ticks instead of 40 ticks. I'm perfectly okay. I'm perfectly okay with half a loaf if I can get a half a loaf on the trade. It's it's totally fine. But the most important part is you kind of see how the price action and the indicator tells you that there is hopefully a little bit of a support here, a divergence signal, and it's a super simple. I should be talking, and let me not talk before we get a resolution. But the analytics of this is that this is a divergence signal, and this generally tells you that kind of selling is stopped and you want to be on the opposite side, especially when you have so much separation between the moving averages, and it's a natural progression for price to come back to its average, just like in everything else in life. And there we go. So I'm narrating this through this so you guys can see the mechanics and the logic of my trading, right? When my trades work properly off the first signal, there is generally a very good sequence of stuff. I am using the input from here. I'm using the input from here. I'm entering properly from here. All of those things I'm doing correctly. And 1, 2, 3, the check mark comes in. If I'm doing stuff incorrectly, then I'm going to have to repair it, 2 or 3 levels down. Sometimes I just have bad luck. Sometimes you can do everything correctly and it doesn't matter. These signals fail and then you have to try to resolve them, lower. But the system has fail-safe behind fail-safe behind fail-safe. In other words, backup for backup for backup, which is why the system is so robust, right? That makes sense? You guys following what I'm doing? Anybody who's new here, are you starting to understand what I'm doing? Because everybody who's old here understands it. Give me a yes in the room. Who's new here with me? Who like starting to understand what I'm doing? Miguel, you're an old hack. SysDoc does not understand it. Okay, so SysDoc, let me go slowly to explain to you. Prices will trend until they reach extremes, right? Moving averages will separate in a trend until there is so much separation, until there's so much selling that buying is going to come in. Remember, prices always move in wave-like fashion. Nothing ever moves straight down or straight up. That's how rookies always get killed in the marketplace. They assume linear progression. Nothing in life is linear. Everything is always one step forward, two steps backwards, or whichever way you want to look at it. There's always a pause and return cycle, right? You with me? So my strategy is designed to both find the linear progression to the downside, and then also to find the points of reversal. The first order of how I look for reversal is how wide is the separation between the short-term and the long-term moving average. If it's 30 points or higher, that's the first order. If they're too tight together, I don't even look at suggestion. Once they get to be wide, then I start looking for opportunities for a possible reversal. Now, what's that opportunity? When the low, when they're trying to sell the lows, right? See this red candle, which is them selling the lows, does not break the prior low. They can't get it lower. They can't. They've sold it. Tried. The second wave comes in. The second wave is weak. When that second wave is weak, and I get an H, meaning it's a higher low, that's the first sign of divergence. That's when I want to be long. So I buy long over here, and I resolve it over here. I bought it long, and it popped back up. Now, what happens if this long doesn't work? I buy long over here, and it just keeps going down. That happens. And in fact, it happens over here. And if I buy it over here, then I'm going to bet on the fact that this is a double bottom, and it's going to test this bottom and bounce back, which is exactly what this thing did, right? So whether I make money here or I don't make money here and I try to make money here, I have a plan to make money at every step of the juncture. At every step of the juncture, I have a plan to make money, right? Now that I've made money, I'm just sitting quietly watching the price continue to get wider, to continue to trend. So now I'm not going to do anything until I get a next H signal. I get a 7H, maybe 8H, whatever it is, until I get a next divergence signal, and then I'm going to plow back in, because that's going to give me the confidence of a possible turn trade. All right. So Gordon says he's understanding better every day. I hope SysDoc is understanding this a little bit better. Amir is understanding it, and now you guys are understanding. So the whole point is that you want to be flexible in understanding what's going on. There is trend movement, there's counter trend movement, and all of it is contingent on where you are on the chart. What is your position on the chart, and then what's the likely probability of where you are on the chart of going one way or the other way, right? Gold, by the way. Oh, look at this. Look, we haven't looked at gold. We missed this trade in gold probably because, yeah, look at that. We missed this trade in gold because remember I said to you gold is going to be a great short, but we were focused on NASDAQ, and that the only drawback with me, live trading with you guys is I can only focus on one chart at a time because I have so many things that I'm watching here in terms of answering your questions. But when I trade myself, I have 2 or 3 charts wide, and I'm handling 2 or 3 positions at the same time easily. So this would have been a great trade. This would have been a perfect trade because I told you we were negative trend now. The retrace trade over here would have been great. We would have sold the 70s, boom, would have made money. But you can't have them all. The point is you have the technique, you have the knowledge, and then you can apply it across all these instruments. Same thing with the S&P. You were negative trend on the S&P. This was a 2L trade, meaning a lower low. You would have sold the 31s. Even if it went to 33s, it doesn't go to 33s, it goes 32.50s. But even if it went to 33s, I would have sold again. But here it went to 32s and it drops like a stone, you would have made money over here. So even in a choppy day like today, when prices seemingly have a hard time, finding a rhythm, you can extract the rhythm out of it, right? Now we start to, by the way, now it looks like we're just really, really starting to dump, which is fine, because now we can, now we can look for, at this point, this thing is wide to 45, which is a really, really wide move. So I'm just going to be very, very, very patient until I get an H signal. When I get an H signal, that's when I'm going to be starting looking to buy the dips, to assume that's going to be some kind of a bottoming formation. With the S&P, it's still very, very quiet, still negative, not much going on here. And with gold, where's the width on the gold? Gold is also now 30 wide. Gold is really, really pretty wide. So again, with gold, I'm going to be looking for divergence signals to see if I can find some kind of a bottom in gold as a trade, because they both really, really extended hard to the downside, and now they need to consolidate. So we'll give it a, I'll hang with you guys for another about 10 more minutes or so. We'll see if we get any kind of reversal signals in gold, any kind of reversal signals in the S&P. So NASDAQ, by the way, NASDAQ, right? If you want to fuck around, if you want to do just fuck around trades here, let's do this. Not for the faint of heart, but I'm happy to try. Oh, wait. Exit. Hold on. Exit. Hold on. I'm not in the trade here. Let's just buy market. I'm going to buy market. Okay, I'm in market here on this NASDAQ trade, just having fun. Why am I in the market? Because I'm buying the round number. I'm buying the 800 decline because this is super, super extended, super, super negative. A lot of times the round numbers will act as a mild support. And if they don't, the numbers underneath the round numbers will act as mild support. So I'm trading very, very small here. And I'm going to try to see if I could fish a bottom over here off of a super, super extended move to the downside. Again, not my setup, but just a fun, just a fun setup for us to do on a relatively quiet day. We'll see if this thing resolves. And there we go. And, the trade resolves and we P&L. So the only time I will do these kind of bogus bullshit little trades is when we have extreme conditions. So there was a lot of extreme conditions here. Lots of separation moving averages. Then a separation from the short-term moving average, really, really, really far away. And then the very natural point that they broke the stops. When they break the stops underneath the 800, because they know they're going to run those stops, the first natural thing is they're going to collect all the trades underneath the 800 and then bring it right back to cover. It's just a classic market making technique. There was I used to be a market maker a long, long time ago, and it's just such a natural trade that it's hard for me to give it up when I see it. But you have to have everything line up in order to make this trade viable. But you get the idea of what was the mechanics behind this trade, right? Now we're super, we're 50, 55 basis point wide. We're really, really oversold. We're definitely going to get a 6L, which is a lower low signal here. And here's the problem with this signal. I would love to short this, but here's the problem. And this is all the things you kind of have to keep in mind when you are. This is what I talk about thinking about 5 steps ahead. You're over here, right? It's very possible that if this thing kind of bottoms out, it's going to verticalize. It's going to do what we call the V-shaped recovery. Now, if it does verticalize and you're in at 16 and then it takes you out, it's really not till about 58. So maybe 3 or 4 levels higher before there's a natural level of resistance over here. So you're going to be assuming a lot of unnecessary risk if you're wrong. In other words, this goes here, you got to short restop, because you don't know where it's going to, where it's going to finally turn to do this. That's why it's not worth it. That's why you look at all of this stuff on the chart. You look at all of this stuff over here to kind of give you additional information to say, is this a trade you want to do or not do? And clearly, I don't necessarily want to do this trade for all those reasons. Although it's probably going to be a pretty damn good short here. I think it's probably going to revisit the 800. You sell the close over here, and it's probably going to drop to 800. You can cover it back up, and then maybe the next move is going to be higher. But when you are vulnerable to that kind of a V-shaped retrace, especially when it's like 60, 70 points to the next level of resistance, not an intelligent trade to want to short, right? Everybody gets that? You guys see what I'm saying? Follow me? And it may very well, pop itself up now a little bit higher. These are all the things that kind of, I constantly think about as I trade with you guys, and hopefully this makes you aware of all the possibilities. Because again, whenever you're putting a trade on, you always want to ask yourself, well, what if I'm wrong? What's it going to go? What's the scenario when it's not going to work? Everybody stops at the scenario that it's going to work, and that to me is a given. Like I don't need to think about the scenario that's going to work, because the scenario that's going to work is going to automatically take profit for me. The scenario that I want to talk about, or the one I think about all the time, is the one that isn't going to work. And am I willing to take the risk for the scenario that isn't going to work or not? So in this case, I really wasn't willing to take the risk. And what I'm actually looking for right now is some semblance of support and a reversal trade. Where I want to be buying the dips here instead of selling the dips. Still a 7L here, so no signal to me that we're anywhere at a consolidation reversal signal, right? So if you had sold this, at 11s, you could have bought this back at 01s, and you would have made money. It would have worked. The trade would have worked. But the problem was that there was a huge amount of risk above it that I didn't want to take. Right? I told you, I thought it had a chance. You kind of have to think about this like, okay, this trade probably has about a 70% chance of working, but on a 30% chance, I'm going to have to really fight this hard. And do I really need to put myself into like a 30% negative scenario, especially on a day like today where I'm not going to be watching the screen for the rest of the day. We're all going to be eating turkey soon, right? So holding bid here a little bit. Let's see if this is a possible double bottom in the making, and giving us a chance to resolve it. Maybe not. Fresh lows here. S&P making lows. See five lower. So still just making fresh lows. No possibility of a decline. And then here's gold. Okay, so gold, look at this. Gold is giving me a 5H, right? Gold is giving me a 5H, about 42 seconds left on the trade. I kind of like this trade. I'm going to take this. I'm going to take the micro trade here. And I'm going to buy it at market. Now, why am I buying it at market over here? Well, because it's already deep in the trade. Now, there's three things that could happen here, right? Let me show you the trade here. Let's go see where I'm at on the trade. There's three things that can happen here. Either this is the bottom of this candle and I got a pretty good price, or what's going on over here? Why don't I have two sell stops over here? Oh shit. The problem is I have like this. Hang on a second, guys. Sorry, I just want to. I'm double clicking on. I have like a non-Mac mouse, and it just drives me crazy on these clicks. So here I'm going to take 13 ticks. Beautiful. What? No, close position. Sorry. Sorry guys. I took 13, 14 ticks out of this thing. It worked fine. So what I was going to say is, why do I enter the trade before the candle completes? As I was saying earlier, there's three possibilities. Either this is the loaded candle and I got a great price, or it's a little bit lower. It's okay. It's not going to hurt me that badly. Or it's going to touch this and bounce right back, and I'm not even going to get a chance to get into it and, TP the money. So in two out of those three situations, I'm going to TP the money if I'm in the trade. And if I'm not in the trade, I'm not going to TP the money. So that is why once I'm deep in here and it's already showing me a 4H candle, because remember, the whole point is I'm buying the dip, right? And it's in a dip category. It's in a dip label. So I'm happy to, in this particular case, buy the candle before it completes. That's the technique aspect of it that you guys see. Anyways, that's the last trade of the day. Every trade resolved. Some of them took a little bit of work, but hopefully you guys get a good idea of how I constantly try to P&L. We don't, no profit left unturned. That's my motto. No profit left unturned. That's scalping. I love that, actually. What do you think, Catherine? Are you in the room here? I think we need that as our degenerate traders. No profit left unturned. That's our stub motto. Anyways, guys, any questions? Anything else on your mind? Hope you guys really liked it. I'm gonna go back on screen here to say goodbye to you. I feel very, very unloved today because nobody's missed my face, and you guys seem to have really enjoyed the fact that we had a faceless live today with me basically doing screens. But I'm glad you guys liked it. Anyways, do we like it without screen? Was it better? I mean, seriously, like as far as just the usability of the stream, was it better that we had the full screen? You don't need to spare my feelings. I'm all about helping you guys trade. My hair is amazing. It's a helmet, my John. It is helmet. That's funny. John is like, my hair is amazing. Okay, I took a shower today. See, like now, if you guys don't want me on the screen, fuck it. I'm not gonna shave. I'm not gonna take a shower. I'll be happy to be grungy. Okay, 007 likes the screen better. Okay. Let's see what everybody's saying here. Chippy says, we missed your face, but it was clear. Okay. With you off the screen, we keep our appetite for the turkey. Oh, so cute. Very nice. Very nice. Thank you, guys. Anyways, for those of you guys in the US, have a fun time. Enjoy. Those of you guys who are going to hang out with me, we're gonna do a Friday trade together. We're gonna do our private Friday trade because we're gonna just deconstruct a lot of these things in much more greater detail. And for everybody else, next week we're hardcore back on. Next couple of weeks we're going to be on there, and then after that, it's going to be Christmas and it'll be dead. But bottom line is, look at the turns, guys. Look how nice this turn trade is. So one of the things that we can talk about when we come back is, for those of you who are not degenerate traders, who are not looking for scalp, these reversal signals, these extreme reversal signals, are actually good for much more than a couple of points. Sometimes they're good for 5 or 10 points, and that's where those of you who are swing traders can use this indicator for like 1 trade a day instead of 10 trades a day as a really great possibility. Like, think about what happens here. If you bought the 65, you're now $3 to $4 larger, right? Like, that's a great looking trade. I'd say 3 to 4, that's a 40, 50 ticks your way on a single trade. You don't need to do too many of those during the day. You can do 3 of those. Look at this, 5. Because it inherently, naturally tells you where the turns are. That's the beauty of this indicator. That's why I love it. And if you learn how to interpret it, it's really going to be it's just going to be a great tool for you guys. So thank you again for hanging out with me. Hopefully you guys all really, really like this. The video will be posted in a little bit. And everybody enjoy the turkey. I'll see everybody later. Thanks a lot, guys. Bye-bye.